Okay, welcome to the 10-minute trading room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. Now, on a day like today, what we need to see is our outlier data showing us the way. So first, we're going to start with the existing positions that we have on, which is just a short in J and J. Take a look. Is it hitting our 10 EMA or half ATR from entry, or does it have a short exit? So let's take a look at that quickly. So here is the outlier data. And as you can see, this has got our sell signal yesterday. We're looking for this to move from the green area into the pink area. Once it gets to about this shade of pink, we'll be looking to take it off. But in the meantime, the outlier data shows that it can stay on. Next, the actual trade that we put on yesterday is doing actually really well. We got in at 159.63. It's currently down at 158. Was looking to roll this. As you know, what we like to do is once it reaches 1 ATR, start rolling the options. That gives us more liquidity up front, lets us book a percentage of profits, and keeps the trade on at the same time. And we're not at that point yet. And when I was looking at this earlier, these are $5 wide spreads. Because they're $5 wide spreads, the next one that we'd have to go to is not deep enough in the money and still has a lot of extrinsic value associated with it. So it's just not there yet. We may get new spreads, or I'm sorry, new strikes come through in the next couple of days. And if we do, we'll be sure to go for 1.5 or 2.5 or $1, whatever the case is. But this is looking good. Our planned exit point right now, if things went the other direction, is 160.57. As you can see, it's nowhere close to there, so this stays on. So let's review real quick. The 10 EMA or the half ATR is what we're looking for. The 10 EMA is still up here. The half ATR is 167.50 or 160.57, so nothing to take off there. So that's it. That's it for today. I went and I pulled the outlier data for the bearish setups for the day. I'll let that come through for you, because that would be the next step here. The outlier data, and only trading in the direction of the SPY signal, and the SPY signal is still on the sell signal, so we'd only be looking to go short. And there were a handful that set up here on that list. I ran them through the outlier scanner. What that does is it checks to make sure that the relative strength is looking appropriate, that it has enough trading volume, and that it's moving in the direction of the trend. 3 of these came through. These 2 did not have enough liquidity to trade. This one did, UL, Unilever. I'll go back to that real quick. But that had a negative backtest going short. And because it had a negative backtest going short, not looking to put it on. Just show you real quick. Let that run. See a negative 19%. So no trade to put on today. So that's legitimately it. We are keeping our risk in check. We're going in the direction of the sell signal or the buy signal for the market, in the direction of the market here, and keeping the trade on and taking it off only when it hits our planned exit point. So easy breezy.